Alrighty, welcome to the second half reporting season webinar. My name's Mark Lennox. I'm a senior private client advisor at HC Securities. All my contact details are there. The direct number is 03 8686 3853. The email's there as well if you need it. It's just a disclaimer as always. So we only provide general financial advice. We don't do any personal financial advice whatsoever. We do offer a range of platforms, as many of you know, to execute our trades and ideas, and most of these are on what's called a white label introducing broker agreement, meaning HC is not a custodian and holds no client funds, so your risk is with the individual broker, be it E-Trade, Saxo, FP Markets, or Interactive Brokers. It also means that we can provide you the best trading platforms for your current needs without being dedicated to one provider. But just be aware that we do not provide any personal financial advice whatsoever. Anything we talk about tonight is general financial information. So tonight's agenda, we're just going to talk about which companies have a higher percentage probability of a positive earnings surprise, which stocks typically run up ahead of their result, and which stocks typically run up a week after their result, and how to profit from the short-term volatility generated by the earnings reporting season using text to trade. So obviously at HC we receive research from all the major investment banks. It's the main benefit of utilising HC Securities as your advisor. As you're gaining access to info you'll never get at CommSec, Interactive Brokers or Saxo Markets directly. We have the luxury of not being bound by the investment bank's rules in terms of being able to move between advice from different analysts and deduce our own conclusions from the data, rather than relying on analysts who have no feel for the markets they operate in, past what an individual company director and his team is communicating to them. So what this means is you get truly, independent analysis from HC Securities of the individual stock, with no bias from our analysts, the corporate division, or the boss, as we have no vested interest to attend to other than our customers' interests, which is generally A, not losing money, and B, potentially making money. So on this slide, we present the candidates for earnings surprises from Macquarie and UBS. These are useful tools if you know what to look for, but in this, it's essentially useless without a number of hours of legwork to deduce which stocks market participants actually believe will appreciate into and out of their results, as ultimately buying a stock and hoping for a good result is as good as flipping a coin, and not the best strategy moving forward. So you can see some of the recommendations there in terms of the risk to the result and risk to the outlook from UBS at the top. So anything with positive in the risk to the result and risk to the outlook is probably a stock that you want to keep an eye on. We've also got Macquarie's earnings per share growth forecasts down the bottom there. So led at the top by Qantas, Gemworth, Magellan, Virgin and Next DC. So which stocks typically run up into their results? We've highlighted Qantas on this slide. So market participants obviously view Qantas as a fairly good stock in the current environment. The macro environment is fairly positive for Qantas. Obviously had the lowering of the Australian dollar, which means more inbound tourism, lower outbound, but remember that the Australian population is relatively low to the rest of the world. The oil price is falling. It's come down from $60 a barrel to $43 a barrel over the course of the last month, and it's actually in the second longest decline since the GFC. I think it's down about 59% over the course of the last 12 months. The micro environment is positive, with the ongoing de-risking of the business and the rollout of strict lowering in spending likely to bear fruit. You can see in the bottom right there, they're looking at a $550 million decrease in the fuel bill as a result of what's happened with oil. And from UBS, you can see there on the left, they're looking at a relatively sharp increase in earnings per share growth for industrials there, led by Qantas. So, overall, the environment's been quite supportive of Qantas, and the share price has actually risen on the back of that. But we'd be expecting Qantas to potentially report quite well on Thursday, the 20th of August. So typically what we do is we look at the quantitative data, so obviously how the share price has performed in terms of the share price itself, not so much what the underlying business is doing. And we generally look at that into and out of the results. So obviously we have two earnings seasons domestically, one that's the first half in February and the second half in August. So what we do is we get the data out of what we call Bloomberg terminal. It's obviously got all the quantitative data that we're looking for, and we then prune that back so that we're looking at the second half of the year. So as you can see here, the total price change has been 55.6% over the last 10 results for the August report of Qantas. The average price change is 5.56% to the positive. We've had a total of 10 second half results dating back to 2005, and the greatest gain there is 20.46%, with the greatest loss of 0.43% in 2012. So typically what we're doing is looking for a high strike rate. Obviously, if the stock does choose to sell off, then we're looking for a very low sell-off. So in this instance, Qantas has sold off by about 0.5%. That's been the maximum negative price change dating back to 2005. Whereas you can see there's 3 years there where it's outperformed by over 10%, being 2006, 2013, and 2014. We know that the average is 5.56 over the last 10 results, but you can see you're looking at an average outperformance of between 1 and say 10% over the course of the last 10 years. So quite a positive outlook for them in terms of the quantitative analysis that goes into the share. And this is one that we would look at potentially participating into the run up into their result on Thursday, the 20th of August. So you can have a look at the chart. Obviously, the share price has outperformed. We know that Qantas has a high chance of an earnings surprise thanks to our investment bank friends studying the company and the improvement in the company's underlying earnings as a result of the macro and micro environment. And that leads us back into the same camp as the investment banks. We know Qantas typically runs up into its August result and has an average return of 5.56%. We can also see in live time that Qantas chart has appreciated significantly and is trading in a very strong uptrend. So we would look to place a buy alert on Qantas under general advice to our clients, suggesting a trade is available and the odds are in our favour leading into the report. From a quantitative stance, i.e. the price of the stock leading into its second half result tends to be positive. So that's one of the 84 companies that are due to report over the next 3 weeks leading into the 27th of August. We've obviously got a list here of stocks that are reporting over the course of this week, and the typical outperformance or the average outperformance after 5 days post the results and the 5 days prior to the result. So this is basically what clients of HC Securities receive. It's just a spreadsheet. It's got a list of all the quantitative data in there, taken straight out of the Bloomberg terminal. And obviously this is the data that we look at prior to analysing the individual companies on a macro and micro basis as well. So what we've done is virtually all the hard work for you in terms of working out which stocks typically run up into and out of their August report based on the historical share price performance. We will provide that spreadsheet to clients who have an open funded HC trading account. So the simple question is, how do you take advantage of this information? We've got a service called Text to Trade within HC Securities. We utilise that to execute the trades for clients under general advice on our Saxo trading platform. So when an alert is generated, you'll be sent an SMS to your mobile phone, which all you do is just simply reply yes. That gives us the authority to go ahead and place the trade into your account for you. So all you really need in order to do that is to have an open funded HC account and a mobile phone to potentially benefit from the analysis. So the SMSs are very simple. Just has obviously the buy, the quantity, the entry price, the target, and the stop. So they're all what are called wrap trades. So we know what our maximum loss is on the individual recommendation that we're giving you. And as you can see, it just says, please reply yes to take the trade with the stop and the target. So you reply yes. We receive that as an email. And basically what we look to do is go and place that order into what we call a key. So what the key is it basically ensures that, if your name's Alan or Zach, you get the same entry or exit price as everybody else. So it's completely fair across the board. And it just ensures that everyone's getting the best possible execution. There's no favoritism in terms of who gets in first and who gets out last. So there's multiple ways to monitor the account. Online Web Connect is the most convenient if you are in the office. So basically, it's just you go to onlinewebconnect.com, plug in your username and password, and it will show you all your open positions, your account value, and how those trades are performing. You've got complete access to the account 24/7. There's a desktop version of the platform, there's an iPhone and Android version, there's an iPad version. There's also a web trader version, which you can probably access from the office. And that just allows you to place trades on the account yourself, close positions, amend stops, etc., etc. This is your trading account. You've got complete control over it. But if you do need any assistance, obviously that's where an advisor within HC Securities will be able to assist. So it's quite simple. If you do want to get set up, it's just a matter of opening an account and funding it. If you do have any questions whatsoever, just feel free to get in touch either on the phone or via email. But hopefully that gives you a bit of insight into some of the quantitative research that goes into picking stocks to trade.